sure what they're going to do yet, but it's going to be like, well, if you got a base of 500 million, you can do what you want. Or if you got a base of 200 million, but not a bad loss ratio, well, you can do what you want. But they're really not sure what they're going to do with it, but they know they don't want all these policies coming into them. But it just kind of bums me out, or it kind of hurts my heart that, you know, I see it so much because being an independent agent, I used to be on the other side. And that's why I'm kind of coming to you, trying to nail home the idea that it doesn't matter who you're with, and every year you renew, you need to call your agent and say, you got anything better out there, because there's no love anymore between the insurance companies and with you. And another thing that kind of bums me out is usually the agents were kind of truthful, but some of these captive agents are throwing out all kinds of stories, and you know, it's just not right. But at least some of them are playing the game right, and I've gotten word back where they're getting their wives insured so they can be independent like I am and kind of slip the business over there, because you got to make a living in this. You know, that's just the way part of the game is. But I get a feeling, and this is going to be my opinion, but I really think, you know, State Farm might pull this thing off. But either way, if they pull it off, the rates, they just want to jack them up big time. And when they throw a little spin out there, we're going to raise it up 20%, that's like Florida-wise. So like people in the middle of the coast would get raised like 1%, and you and I up here in Okaloosa and Santa Rosa and Escambia County, we get jacked up 60 and 70%. So don't let the paper fool you when it says, oh, it just went up 13%. Your rate's going to go up crazy. And that's kind of one of the reasons why I want to get a point across to you. If you can switch to a company, you get locked in for a year. But I really get the feeling it's just going to get really ugly out there. And it kind of it's just bumming me out. So that's why I'm here again, to try to explain to you people, when you see this whole nightmare start breaking up and coming down, there are options out there. I mean, you can call anybody you want out there. You can hop on the phone and call one of the Allstate ones or nationwide ones. I mean, they're captive agencies, and they'll say, hey, well, we've got these other companies for you, but they'll only have like 2 or 3, where your independent agency will have like 15 or 20. And we usually got the same ones they got too. So go ahead and give them a ring, give me a ring. It doesn't matter. You just got to save some money, especially in this market. It's just crazy out there. So with that in mind, let's talk more about the money. And let's talk about Citizens for a minute here, because, you know, how does Citizens come to being? Well, back when Andrew came through and almost put all the insurance companies out of business, the governor back then said, hey, let's start thinking called a cat fund, where we put a little money aside, and then if there's another big storm that comes through, then we can come in there and we can help pay for it. Well, that was a great idea, but you know how it is, and the money gets inside with the government and everything. And so now there are about $18 billion upside down in this cat fund. And what I mean by that is that they promised $29 billion to cover all these homes, but they're short $18 billion. So that's kind of scary. Then they made the Citizens company, because the insurance companies didn't want to insure anything on the water anymore. So that became a problem. So they came up with this great idea like, hey, we'll invent Citizens and we'll insure everything up and down the coast. Well, that was a good idea, except a storm came. So there's no money there. So where does the government get the money? Well, they tax you, but they can't really just come out and say, hey, we're taxing you. What they do is they go to all the other insurance companies that have homeowner policies and say, hey, we need some money now, so we're going to surcharge you. And now it's getting so bad. It's like when you look at one of your homeowner policies and you look at it, you'll say like, oh, here's 8 or 9 of the main things. This is what I'm paying for. What are these other 7 or 8 things? Well, those are all the taxes that are just building up and building up and building up. In fact, if you got a Citizens policy now, in the paperwork, if there's a big storm, you could be personally surcharged thousands of dollars on your policy. So you really want to get out of the Citizens. All right, now let's talk about these A ratings and where they come from. What it is this independent company comes and he looks at it and they're saying, all right, they got enough money and enough reinsurance if there's a storm to hit so many houses. So they'll say, okay, this has enough money, we'll give it the A rating. Well, the problem is all these companies that have an A rating are attached to the state and they have to buy this reinsurance. So not only are the politicians getting on the governor's case saying, hey, we got to do something, we have to do something now, but even the rating companies are saying, hey, if you don't do something, we're going to switch these A ratings and we're going to knock them down big time. So that's why they're pulling extra hours right now up there at Congress, because they got to do something. And we have to plan ahead here. And that's why I kind of want to break the bell to let you all know it doesn't matter which company you're with. What you need is an insurance agent who's on your side. And that's why I really love being an independent agent. And all the independent agents I know, because we used to be captive. You know, we came out of that and we saw the pressure they put us under. I mean, you probably get calls right now from your captive saying, hey, you need some life insurance, or do you want some financing ideas or abilities. It's because they have to sell that kind of stuff in order to write the policies they have. And that used to just drive me crazy. I mean, in my opinion, that's not a way to run a business. I mean, I am an agent, so I represent you, and that's what I'm here for. These other companies, like all the ones that I write through, they come in and they say, this is what I got, and they kind of get upset sometimes saying, well, don't sell us just on price. And I'm thinking, well, what else is there? I mean, we're going to cover the home, and we're going to cover this, and we're going to cover this. It doesn't matter as long as you pay when there's something that goes down. So that's why an independent agent, in my opinion, is where you really need to go at this time. Because you call another captive, they only got 1 or 2 companies, and that's all they have, and they're lying to you as you think that they're getting a good deal, because there's way better deals out there, and that means money in your pocket. And that's what makes us happy here at Carpenter Insurance, because it makes you happy because you're saving money. And that's what I love about this job, is because I've insured hundreds of you all over from State Farm and Allstate, and you're telling your friends, and the business is just rocking and rolling. And it's great. It's a great job to be into. It's making people happy. And that's one of the things I kind of wanted to bring up about this A rating, is that, you know, if it starts to change, where are they going to get the money from? Or what are they going to do? Or what are the people that do the mortgage companies that say it has to be an A-rated company? Which is another crazy thing altogether, because all the mortgage companies are failing. I mean, everything is just going to pot, and you need to start saving some money. So that's why you really need to give us a call. And you need us to get a call as soon as you can, because every day things are tightening up. And what I mean by that, it was like less than a year ago, anybody could have called it basically with any home, and I could have wrote it real simple with 8 or 9 companies. But now, since the governor is saying, hey, we want more money, and they're squeezing all these companies, they're saying, well, okay, but I'm only going to write things up to like 12 years old, because it's cheaper for the reinsurance up to 12 years old. And then when you go from 12 to 25, it goes up, so I got a handful of those. But you get up in the 40-year-old homes and older, nobody wants to write it, because the reinsurance companies say, hey, we want twice as much. I mean, these insurance companies have to pay $2 for every dollar they come in. They shut it down real quick, and that's what I see happening. So there's going to be 2 things, I believe, that are going to happen pretty quick here. Either one, the state's going to win, and all of you are going to get dumped over to Citizens, which is just going to be too much for them, and so you're going to want to run then to us over here. But the thing is, all my companies are going to say, hey, we'll slow it down. We got to keep an eye on what's going on here. Or 2, they're going to get their way. Then all these companies are going to come in and just start jacking it up through the rate, which is kind of funny. What's going on now is like, now the state's saying, all right, you know, State Farm, if you got the kind of money, now they're not going to say State Farm, but they say a big company that has $500 million. If you got the money, you know, we're thinking about, we'll let you do your own thing, but we're not going to give you our back by the state approval. That's just pretty much a hustle that you have to pay the government. But we're not going to give you that. But maybe you got to get us, we're going to surcharge your policyholders. So they're going to get their money in either way. The problem is, it's just a big fight over the money, and you and